Should you incorporate your business? A lot of people ask me, Mo, should I incorporate my business? Should I run it as a sole proprietor? I know what they're thinking. They're talking about tax advantages or not. But I actually would flip it around the other way. What do you expect from the business that you're running? If you're not expecting to make 100 grand or so, maybe you shouldn't run the business. Maybe you should just, get a job. Forget about, running this business. The reason I'm saying that, I've seen a lot of people, incorporating the business and they're making about 20 grand, 30 grand, not a lot of money. And then even at that time, should I incorporate or not incorporate? So at that stage, I would say, you're a very nice guy. I'm sure you work really hard. You're even, super smart. But this business is not for you. If you just get a job, you're probably going to make 50, 60, 80, depending on what you do. You could even get a job that gives you 100 grand. So if your eyes are not set at growing the business, 100K should be your start. And after that, sky's the limit. You could make 2 million, whatever. You have to break that barriers that we have. I guess maybe society is giving us. Maybe parents have given us, they're saying, just be average. So if that's your mentality, if you want to be an average, definitely don't incorporate. But if you have dreams, if you have desires, then you definitely need to incorporate. I had a client a few years back, and it was actually, the reason he became a client, he just called me for that. He said, Mo, should I incorporate? And I said, well, let's say if you go from here to Montreal, should you go on a bike or should you go in a Ferrari? I'm sure your answer is the Ferrari. So in starting a business, if you're dabbling, if you're just playing around, if it's just a hobby, maybe if it's a hobby, sure, do it. Just do it on the weekend. But if you're a serious entrepreneur, then you definitely want to incorporate. You want to grow the business. You want to actually put yourself on $100,000 salary and then work backward to, what else do you have expenses for? You have rent, you have subscriptions, you have insurance. So add all of that back to your budget. Then, so, when you're starting a business, so your threshold or your break even would be $200,000 in sales. So you make $200,000 in sales, it pays you $100,000 in salary, it pays the difference. And actually, another good thing that comes here, which is advantage of incorporating, is once you build this business, show $200,000, $300,000 of revenues and income and profit, then you could actually sell this business. And that sale would definitely, if it's incorporated, that sale would fall into the lifetime capital gain exemption, which is short of $1 million. So basically, you could sell it for almost $1 million for tax-free if you haven't used the lifetime capital exemption. So should you incorporate or not? Again, it depends on your level of desire, level of your wants, your needs, your wishes, and your idea about yourself. So if you want to be average, if you want to be medium, if you just want to be, again, average, don't incorporate. And, just get a job, actually. Forget about business. So, on other benefits, so on top of all this, there are other benefits that business could have, or incorporation could have. It limits your liability. It doesn't mean that you're not liable for anything, but at least financial-wise, I guess you're liable. The corporation is liable. What corporation is? It's a separate entity that you create or is created. So it's got its own number, it's got its own HST number, corporate tax number. It has all of that, and then you're the shareholder. So when you sell it, you just sell the share to somebody else. So when you're incorporating, it becomes an entity on its own, and it would be liable for things that it does. Again, because you're the director or the shareholder, you would be reliable for whatever legal issues that may raise. But for money-wise, it would be limited. Another benefit in incorporation is tax deferral. So let's say 1 year you've made $200,000. You've taken your $100,000 of salary, and you got $100,000 left. If it was in your pocket, you would have paid probably on margin or marginal tax rate. You would be about 50%. So on the 100,000 net profit, if it was in your pocket and you were not incorporated, you would have paid about 50K. But because you incorporated, you pay the corporate taxes. So let's say corporate tax is at 15%, you only pay $15,000. So the rest of the money stays. So $100,000 net profit, you have $15,000 in taxes that you paid, you have $85,000 left that you can leave in the corporation. If you take it out, you got to pay taxes because it becomes yours. But let's say you don't need it. You got a good life with the $100,000. You got this extra $100,000 that the corporation made in profit. You don't need it. You just leave it there, and the corporation can grow itself. It could buy another corporation. It could buy more asset. It could even buy securities, stock market, and whatnot. So let's say you do this for 10 years. So in 10 years, the corporation paid 15. So if it was in your hand, well, 15 every year, which is about $150,000 that the corporation paid in taxes. Now, if it was in your pocket, you would have paid $50K each year. So that's $500,000. After 10 years, basically, you've saved $500,000 on that $100,000 extra income that stayed in the corporation. So imagine what you could do, and that's just the saving. So beside whatever you've accumulated, or the wealth had created for you. Another benefit of incorporation is, let's say you have kids, they grow older, and they like what you do, or you've trained them. In the old days, the sons would take father's or mother's place and do the work. So maybe your kids grow up and they like to they like what you do and they want to do that. So at that stage, what we do is we do estate freeze. So we come in, we say, okay, whatever you've done, we keep that and we give it to you, and we give it to you in a form of preferred shares. This will be done through a lawyer. So that would go through you in a preferred share. And your children would be the new common shareholder. So basically they're controlling the corporation, they're running it. So this would be a great transfer of asset from yourself to the business, or to your kids. So again, should you incorporate the business or not? I would say if you're serious about this business, if you're a serious entrepreneur, definitely incorporate.